So nice little rally here. Nice little rally. And again, this is what we were talking about pre-market, was that, hey, we've got this little range, but really, you know, what happens outside of that range, right? Getting outside of that range could be an opportunity to fade it back down, or down here could be an opportunity to fade it back up. At the moment, 2168 is what I mentioned earlier. If this thing gets above 68s, that offers a better opportunity to fade it back down, even though this is a new high. So we could be looking at a little bit more strength here towards 67.5 and 68 once we get that zone, which is the previous week's close. That's the previous week's close, is 67.5. So once you get above that, it's going to be very important here to see how it behaves. So I think there could be a little bit more upside here into this zone. Once it gets above 68, it could be an opportunity to fade it back to value, which right now is 61.75. So to consider that price is rejecting 43s here, I think that's your question, right? What will we know is rejecting? How will we know if crude oil is rejecting 43s? And I think we're starting to see it right now, where price came above it here and then came down and rejected. And then right here off the right edge, that right there is being absorbed, and price is rotating downward off that zone. And so it's starting to happen already. They're trying to do it right now, at least. So they had the move above it and they rejected back below it. And then right here off the right edge, they're absorbing. So this zone has to continue to absorb in this way. And that's what they're trying to do right now. So I think it's starting to happen. If price drops, so if they do reject these 43s and it drops, I'd keep a close eye on 42.62 here, 42.60, because that was a low. Price dropped below it. They came back and tried to make it resistance. They got new lows, but it was rejected. And that's what's forced the short squeeze, right? That's what forced the short squeeze. So it was this over here that forced that major squeeze. So now coming back into that level, 42.60, should price come into this zone, it's going to be very important, because if bears can't get price to go through that area, that could offer another opportunity to squeeze. So right now I think that bears are trying to defend 43s, and if they succeed, bulls are going to try and keep 42.60 bid on the next round up. So those are my two action levels right now. 43 here, 43.05, and then you have 42.60 down here. That's awesome. What a great drop. 68s, boom. Even despite this drop right now, if this price gets anywhere below 54s, I mean, it's a buy back up. If it were to get there. You can see right now it just pushed through the S3 standard deviation and is now trying to retest it from below. Typically speaking, you know, if they're going to try and extend this thing, they would come back below this area and now try to go again. But whenever you get outside of third standard deviation, you got to be very careful, because it tends to snap back to value. But again, if this thing gets anywhere in here, in this zone, that's likely an opportunity to fade it back up, despite how bearish it looks. Oh, that's awesome there, Trader Bliss. That's fantastic. What a great short. That's a great spot. So remember, you know, even despite how bearish it looks sometimes, once you get to the lower end of the range where there's rejection, I mean, that's a great spot to pick it back up. Okay, here's the ES. We got into the 54s here. That's what we're looking for, right? If we get down here, it's going to be nice. Here's the previous session's low. Yeah, syntax is huge. I mean, if you have the wrong comma in the wrong spot, or the wrong bracket in the wrong spot, it breaks everything. Absolutely. So right here, that's the previous session's low. We just rejected. Price is below it, and right here, it's coming back to defend that level from below. This is usually a buying opportunity back toward value. Usually. So right here, that's what's happening right here. previous session's low. We got toward those 54s. And that's what we talked about. If we can get down in this zone, this is an area just like the 68s that we talked about pre-market. In the pre-market report, 68s is up here, was an opportunity to fade it back down. And if we get down here into the 54s or something like that, it's an opportunity to fade it back up. If this happens to be the low, because it is 54s, right? 54 is a zone. What we can do here based off of this current range, let's bring it up a little bit right here. So what's the high here? The high is 68 right on the button. Right click, add a drawing, let's go extensions. We don't know that this is the low just yet, but if it is, 53.75 is here. And then 53.75 here. So the midpoint is going to be 61s-ish. Or 60.75, somewhere in there. So you get an impulse move. It goes up. It couldn't go up anymore. Drops off. Right now, it can't go down anymore short term. It hit our 54s. Remember, 68 and 54s was basically the edges today. Watch out, watch out. Don't do anything until you see an edge. We saw this edge, and it played it. So nice. Now you're down here, and anytime you see an impulse wave down, the implication is that you're likely going to bounce at least back to the midpoint. That's about 61s. So here's crude. Haven't looked at crude in a while since all this craziness has been going on over here. Here was the 42.60. So up here I said this could be absorption. That's what we were looking for a shot at seeing a move downward. If we see a move downward, I mentioned bulls were going to be looking to defend this level to bring it back toward this level. But again, that's just basic market structure. That's basic market structure. The whole squeeze over here happened because these bears did not get paid down here. So you had that low, price holds, and then takes it offered. Here's a new low. Everything's going great. Here's a retest of this level. Let's make it and seal it and make it resistance. Great. Now you have new lows. And boom, as soon as you get those new lows, they're rejected. And price pops back above. So if you bring this over like that, you see that low? Prices are down here for a second, and they pop back above, and they start to make that level support. And then the squeeze happens because these lows were rejected. So now it's a stops run. And it all comes back to this level here. So they run the stops back above that zone and take off until they find a rejection point. And then they come back to that level, and bulls want to keep that area bid to seal and trap any of these bears that are down here. And so that's what they do. Here's the YM. The YM also finding a little bit of strength here. And I mentioned earlier that we could probably get back toward the 18, wherever prior support was right here. So you got 18,380, somewhere in that zone. You got this little thin portion of the profile here. So we could continue to squeeze right back up. And if we pull up an impulse range on this as well, here's a sell-off. Let's see what the high is here. It's 445. To add a drawing, here's extensions. The low here is 311. So we got to get somewhere to about 18,378. So that's 380 also. So that's not bad. This is what I talk about, and this is what we mentioned before, and this is kind of showing it intraday. If there are stops here at 380, right, the sell stops were below there, and the sell stops were gunned, typically speaking, when you go and run through those stops, you go 50% past those stops from where you came from. typically speaking. That's why I always talk about 50%. And then what I talk about is, once you find that low, you usually bounce back toward that point, and that's an area where bears then want to come in and defend. In order for them to defend, you got to get there. So I think 378, that's the midpoint. 380 is that level. So I still think there's a great shot to get back toward 380. And once we do, it could be a short-term area to defend and retest perhaps the HVN here or maybe even the lows. But I still think there's more squeeze here ahead. We're starting to see a little bit more squeeze right now. And once we get to 380, that's going to be important. I think, once price gets up there, we'll see what happens. But after you see bears take control here and run the stops, typically speaking, they may want to come in at least attempt one defense of that zone. Whether it works out or not, we'll see. If price comes in here, they could sell it. But then once it gets back toward here, they may see bulls come in and defend and try to squeeze back up toward value or something of that nature. But right now, 380 is where we're looking for price to go to right now. ES is still working toward its 61s. Almost there. Got within 2 ticks so far, so we got 60.5, so it's almost at 61s. And again, this is just kind of what I talked about before. It can be so hard to trade the chop. But once price gets to an edge and starts to see rejection, it makes things so much easier and clearer, usually, because you know that bears are up here ready to go. You know that bulls are down here ready to go. And now here we are pushing through 61. So for all intents and purposes, we got our bounce from 54 up to 61. And given this bounce, the next pullback could still be a buying opportunity. All right, perhaps 59s, and it could perhaps squeeze back into 64, 65. So a nice push, a nice squeeze, exactly what we were looking for here off of these lows. That's the reason I put the key range up. And you notice I don't usually put a key range up before a key range has been met, before it's been hit at the midpoint. Because a lot of the key ranges happen overnight, right? So they're already made for us. But when you have one that forms intraday, this is a developing key range. When I forecast it before it's been reached there, and now it's reached that level right on the button. So very nice move. I would call that a nice completion of the move there. Right here, the stops were right here. That's where the stops were. They came out here, and price goes 50% down. Basically whatever it did here, it forecasts that downward, right? So half of the move is down here, and half the move is up here. And then it finds a low, and then it snaps back toward that point. So this is kind of an intraday representation of that higher time frame thing that we always talk about. That's why I mentioned if we can find a low down here, we probably snap back to the midpoint, and it coincides right where these stops are. And before that even happened, I mentioned that if we come back to this level, we're likely to bounce back to this level, and then you may see some bears try to come in and defend. But right here you can see, look at that, right on the button. Right on the button. We just reached it right now. So 18,378 right there.